Hey traders, Todd Gordon here with tradinganalysis.com. This is your free video update. It is now Tuesday night, July 30th. We are waiting for Apple earnings to come out. I have it set up here just on the 5-minute. Hopefully trying to get the earnings report before we end the video here. It's 4:27 in New York, so if we get the earnings report, I'll come back to it. But I want to draw your attention here to the S&P as well as the gold market, two markets that we are positioned in the options market for tomorrow's Fed meeting. Fed ready to cut rates for the first time since 2008, 11 years with the market at all-time highs, trying to keep the economic expansion going. So turning our attention to the S&P chart here, this is the daily. It's interesting. It's a tough one to count. It's, you could make the case from the June 3rd, 2019 lows that the motive waves that I'm proposing here are three-wave movements up in 1, down in 2, three-wave movement in 3, down in 4, and then are we set to do one more tomorrow, and then will they fade it down in wave 2? I'm arbitrarily putting the C wave of 5 up here. Let's figure out where the market must stop for this count to be a little bit more favored. Now, it's not a true leading diagonal because 4 does not enter the territory of wave 2. Could it be a complex? Could it be something different? Potentially, but let's just operate under this premise for now. First thing I want to do is I want to do a ratio analysis 3v1, and you're going to see we didn't even reach the 61% relationship. We have a 38% relationship of 3v1. In order to keep this valid, if we do a 5v3, we certainly need to stay below the 100% relationship at 30/80. That would invalidate the count. I think a 61% relationship of 5v3 is reasonable, and that would be at 30/38, and then we get the wave 2 drop. If you look at the typical fib retracements that we expect to see on a wave 2 drop down into the 30 to 50 to 61% relationship, that's down around 2,900 in the SPX. So if we go over here and go to monitor all products, look at the SPX, here's the actual trade that we have on. We have a put butterfly, and a put butterfly is a bearish trade. It's not an outright high conviction short. It's a way to take advantage of the directional aspect of options, but also that decaying property of options, which is theta, which is time, putting the time in your favor. This is a trade which is a butterfly, which is basically you're buying puts at 29.25, selling double the amount at 2,900, and buying a lower kind of protection at 28.85. And the way this looks, as we go over here to the risk graph, is if we can get down to 2,900, max profit is almost $11,300 up here. The max risk on this trade for me is 1,000, and I would cut it before 1,000. Right now, we're down just a little bit of money because the downside obviously has not started yet. So we're looking at, potentially a push lower, and if we get an all-out collapse, I'll make 4,000. If you look at the blue number, you'll follow that profit and loss at expiration. The idea with this butterfly trade is to get down to your target, and that's why I love Fib and Elliott so much with options trading, is because we're trading with a plan, getting right down to that 50% retracement. If it doesn't work, the risk is certainly worth the reward. I'll cut the trade and move on. Another trade that I have working here is the gold market. We've been following this. I did another video earlier, a free video that went out in Elliott Wave International on gold, and I think the break is continuing to push higher. There's 2 possible fib resistance zones that could catch C of B. Number 1 is at 1,500. Number 2 is right around 1,680. Okay, so if we break from the weekly down to the daily, you'll notice that I'm tracking the gold futures on the right scale. The GLD is going to be on the left scale over here. This is the ETF that we're using to trade GLD. So as I break blue 1 down and kind of go down to 1 smaller degree, move in here a little bit, I can make the case that we have a triangle here in wave 4. If we just decompose it and let motive wave do the work for us here, we'll need to bring that over here a little bit. CD, something like that. We should be able to move on up into wave 5 resistance on the shorter term, which is right around 1500 to 1530. If you look over here in the left scale in gold, you have 140 to 145 GLD upside targets. If I bring my platform over here and we go over to the GLD position, we have a trade right now which is buying the 135 strike call in September, selling the 140 call. So we have 52 days to go, up a little bit of money today, no big deal, but we're trying to move on up into that lower fib resistance zone into 140 in GLD. So with the Fed cutting rates, trying to support the economy, you're really starting to see gold finally move out of a 3-year range. A beautiful, I think, V-wave triangle, and we still have higher to go. So we can take advantage of a dovish Fed in the options market. So let's give Apple one more look here, see if anything came out in terms of earnings. Oh, yep, they did. 214. We're up about $5 after hours on earnings. So interesting. We'll see what tomorrow brings. We're going to leave it there. Dicey market in here, thin summer market, but there's some pretty good moves setting up. So stay tuned, guys. Good luck. Hope that helps, and we'll see you on the next video update.